Well, hello. As usual, the first thing we're going to do is talk about some specific price points. The first specific price point is the previous day wick. When I started trading, I didn't like to see that price would go beyond this wick and then go down. Just in general, I wouldn't like to see that happening. So the other specific price point is that the daily volume imbalance high. You might think that this doesn't look like a volume imbalance, but when we put on the settlement price, we could see that there was indeed a volume imbalance. This portion here, if we put out the settlement price, we can also see that it's the previous day opening price. This is the daily volume imbalance low. It's not that relevant for now, but we're gonna leave it like that. As you can see right here, this low is a low that was formed on Friday, the 9th of August. If we put in the settlement price, we can see loads of inefficiencies. Of course, you take partials there, but this price point, I want to stress out very much, because why? If we go into the weekly chart, we can see that the opening price of this weekly candle chart of the week of 5th of August, we can see that the price went down to that point. Another specific price point that I want to talk about is the midpoint of previous day range, this point. As you can see, the price is 917. I've discalculated, so that's okay. So keep that price in mind. This is into close proximity into that. 968, and then what's other in close proximity of that is the new week opening gap. I'll make it thicker, I'll make it red. This one is at the same price point as the previous day opening price, so that's a high point of resistance. I'm gonna change that back for a minute before I forget. Okay, now let's talk about the trade. We have talked about the point of resistance and the possible profit targets, which is the previous week opening price and the daily BISI low. Now let's go into the trade. Oh, another important price point, excuse me. The 1 hour chart, if we go into that, you can see here there's a lot of inefficiencies and a lot of inverse fair value gaps. My eye immediately went to this one, because why? Because of the price points we've just explained. So this point is very high resistance. Now let's take a look at the 15-minute chart, where we can see that indeed the price went up and then went down. Now first let's talk about the 8:30 opening price, which is the non-farm employment change. As you can see, this low and this low has been taken already. So when the price opens, where does it want to go to? It wants to go to the low resistance liquidity run, lots of sell side, and this price point here first as a Judas swing. When it does that, it switches around here. It leaves inefficiency here at the 8:30 candle. We expect this to be an inverse fair value gap to then go up and then go down. This inverse fair value gap is high probability for a short, because we have an immediate rebalance as notated here. So we can have an entry here, we can have an entry here, we can have an entry here, and we can have an entry here. We can have even entries lower. But let's focus on the sniper entry, the one shot, one kill, the entry you want to have. As annotated in here, what happened here, I'm not going to go over that again, but I want to go over the entry. Once again, the price points are in very close proximity, exactly the price of the new week opening gap, and like we mentioned in the beginning of the video. This is quite dangerous because you execute before the opening bell, 9:30 opening bell, But this, it's a valid execution because it looks, you know, Judah swing, you have a fair value gap, 2022 model. Order, it comes to the order block, and then your second price point comes to the low of the new week opening gap. The body's respecting that. So it's a high probability trade, even though you are not inside the opening bell. Also, if we look at the regular trading hours, price did not really make an attempt to go to close that gap down. If we measure that, oh, it's already, we see that it didn't even came to midpoint of that gap. So we are extremely bearish now. As you can see that we have the first fair value gap formed after 9:30, this one. It didn't came to that point because we want to see that as a breakaway gap. If you found that the price would enter in here, you wouldn't like to see that price would come above the upper quadrant of that fair value gap. If we go to the 5-minute chart very fast, we see here that this fair value gap indeed is filled. Right here, you could have entered in here, so that's a very good entry. But now let's just focus on the 15-minute inverse fair value gap. As you can see, the price came down in here, then it went up in here, and then it went down again. It came back up to exactly the midpoint of that inverse fair value gap, which could be an entry. When it came down in here, in this order block, could be an entry. But what's more important is that after you had that, you had immediate rebalance, which is an indication that price is willing to go further down even more. If we take a look at the time annotations, at the immediate rebalance happened at the 10 a.m. candle, which then at 5:15 candle, the first candle that forms then, that means that that should be your short. If we go take a look at the candle formation, this is 5:15 exactly. So after that, we are actively looking for a short entry. Oh, if we take a look at this candle right here, we can enter on the order block, but what is more something, you know, that we are all familiar with is this inefficiency, which is called the silver bullet, right? Just watch ICT's video. The silver bullet, this is how you treat that, right? 10-11, price pulls down, and this is the last entry you should have. And after that, price pulls, and you measure the gaps of how well or how not well price is respecting you in going lower. As you can see, I'm going to go over quickly, that it leaves inefficiency in here. Price does close this gap, but this is a breakaway gap. Then price finds support on the resistance on the volume imbalance low. It takes out these lows right here. So it's really bearish. Price didn't show you any indication that it's not willing to trade higher or higher or higher. It's consolidating in here, but I'm not really going into that because after that trade, you should be done. But it's consolidating not on a random price. It's consolidating in a new week opening gap. I didn't annotate the which week it was. As you can see in here, it was week 32. This was probably before that because I didn't annotate it like that in those days. But as you can see, price is respecting a lot of the price points that are very significant. And you see a lot of consolidation because it's Friday, okay? And because we have large down day candles this entire week, basically. From, Monday was a bank holiday. We had a crazy week now, okay?